Hi there. Check out this chart. Doesn't it look amazing? Yeah, I know. So these are free indicators. And by the way, the system that you're going to learn in this tutorial is completely free. You don't need anything to get started. Everything is on TradingView. Chill. I show you all the links and everything in the description. I'm going through the indicator parameters, the names, and how you can find them and basically create the same chart setup. My name is Tobias. I'm a trader since 17 years. Started with 16 years of age, lost a lot of money, struggled all the way through the years, and since a couple of years now, I win more than I lose. Okay? I also have like a brand that's called marketrockstars.com. Everything you can find in the video description. I have like a support group or like a trading group on Facebook. I have like a trading channel on WhatsApp. I'm on TradingView. And you may think, okay, cool, that sounds nice and everything, but do you really know what you're saying and what you're doing? And I say, well, do your own due diligence on that. Here is my TradingView account. It's Market Rockstars, okay? And every now and then I do post some trading ideas. These ideas are based on swing trades, which means that usually to fulfill these trades, it takes around 30, 60, 80 days, okay? So I would say that people who can predict the market for the next 30 to 60 days or so have to know something about it, okay? And let's check this out. Okay, so for example, on the 30th of March 2020, I said, okay, this will move into like a really nice sell area where we can create a really nice, profit area here. Let's see how the market behaved. So just got it, pretty much nailed it. So we are in the profit area here, and you can see that this probably will take a couple of days still or weeks still to fulfill completely. Let's go along. You can see here there was like a buy area on the 18th of June against the Chinese yen, and after like at the 6th of August it hit the take profit area 1, and then on the 2nd of September it hit the profit area 2, okay? And you can see that this pretty much did all of the good stuff. Here again I defined like a sell trade, and you can see that we were in the sell area. We are currently a little bit in the profit area, but let's see how that turns out to be, okay? Another one, and then you can do your own due diligence. I just prepared all the tabs here, but hey, go to TradingView, check out Market Rockstars. You can find all the published ideas. So the euro against the Polish zloty, again on the 25th of March, I said, okay, this is a really nice sell area, and then we are currently in the profit zone as well, okay? Now, since that's all out of the way, I'm not a professional, financial advisor. I'm just a trader explaining my trading systems, my strategies to you. This is all for, educational purposes only, and trade wisely, okay? Take it as a hobby and do not expect too much, okay? In no way you can take this information that I'm showing you and put it on real money accounts, okay? This is just for educational purposes. You can go ahead and create like a TradingView account, and you can see that you can actually trade in TradingView. You can start paper trading, which means that you're going to use like not real money accounts and just try to learn this strategy, okay? So I'm a big fan of telling you that trading is a skill and you can learn this skill, okay? For me personally, I was very emotionally attached to my open positions, so I went into a really technical aspect of trading, which gave me a really nice and precise, trading rule. basically, yeah? So this video is going to show you all of the strategy. It goes through the trading rules, the entry criteria, your trade protections, your open trade management, how to exit the trade properly, and also the money management side of things, okay? You will find the link to this chart at the description of this video, as well as the connection to my Facebook trading group. It's called Market Rockstars. I do also have like a WhatsApp group where I'm active while I'm trading. I create audio messages and explain why I'm doing what. So you may feel free to check that out. And so let's dive right into the charts, okay? So you can see there is like a cycle indicator here, and below that this is something like a volume indicator, and here above where you see the sell and the buy areas, here buy and then here sell again, this is an Heikin Ashi chart, and on this chart there is like an Heikin Ashi indicator that basically shows you the buy and the sell areas of the market. Now, you can see that this market doesn't go anywhere. It goes up, it goes down, but it ranges, which means that this is a flat market. The good stuff about this strategy is that you're going to open and close one trade in 24 hours. It's not as quick and stressful as scalping, and it doesn't take so much time like the swing trades I showed you before. So it's pretty nice to do. You're not going to be stressed out that much. So we are at the US dollar, Canadian dollar 5-minute chart, and I'm using also Heikin Ashi candles for that, okay? Smoothed Heikin Ashi candles, just to make it easier for you to really detect the highs and the lows and the direction of the cycles of this market, even if it's sideways, okay? There is no trend in this market. This would be a trend direction here. This would go really up, okay? And the funny part or the good stuff about this strategy is that it works in any type of markets. And as we know, markets used to move sideways a lot, more than they trending, okay? Which means that you're going to see really nice entries all day long with this strategy. And let me get started by telling you the basic concept of what this is, okay? So first of all, you can feel free and click the link below at the TradingView chart layout. I enabled the sharing, so you should be able to really see this chart as it is currently. And before I get into the details of the names of the indicator and show you the exact parameters that you need to set up, let me explain the basic details or the basic idea about each and every one, okay? So this is a cycle indicator, and it makes it easier for you to determine market highs and market lows, which means that you're overbought or oversold, okay? So that's why the area here is red and the area here is green. And these lines are between 90 and 10 or 30 usually. So it's 70, 30. I use like 90 and 10. You can see on the scale that the lower line is at 30. I need to change that. You can see it's here at 30. And then this one here is at 90, okay? Now, the really cool stuff, if all of the indicators align, okay? So this cycle indicator is just here to make it easier for you to see the swing highs and the swing lows of the market, okay? Now, below that, you can see this blue, red, yellow, and gray bars. Well, what are these? As you can probably already figure, it's volume, okay? And you can see you can see these the black line here. This is just the moving average showing you the average volume traded. Now, usual volume is only like either only one color, or it has like red for sell and green for buy volume, okay? This is called better volume, okay? And the usual basic concept of it is pretty complicated, but I just wanted to create this video so that you can instantly get started, not explain you the mathematics behind it or the proof of concept of those indicators. I'm just providing you the basic strategy here, and feel free to practice and, you know, do your own research on these indicators. Now, in our case, you can see that here red means sell, blue means buy, gray means, well, we don't know, and yellow means there is low volume, okay? So we are going to only focus on the blue and the red volume bars in context of the cycle indicator. So if it's low, we are focusing on blue volume bars, and if it's in the overbought area, we are focusing only on the red volume bars. And as soon as both synchronize and align, our setup to look for an entry is getting to be very clear. So let's go ahead and check out first like the buy setup and then the sell setup. So you can see here that we have an oversold condition. The cycle is low, and you can see that we have like this average line, the black one, and you can see how the blue volume exceeds the black moving average of the average volume traded, and you can see the second bar is higher than the first buy volume bar, and then also exceeds the average price, volume price traded. And once those two things align, and you get also the confirmation of the Heikin-Ashi indicator that tells you to buy here, basically, this is a really nice setup. Also, you can see that the black line crosses the red line below the 30-ish like line that tells us that the market is oversold. So which means that the black line is greater than the red line on the chart of the volume bar that is also higher than the average volume price traded. Which means that this is a really perfect setup to buy, okay? Now, when do you buy exactly? As soon as the second bar is blue and exceeds the average volume traded. Exactly then, if it's equal to or greater than, you can start to enter your trade position. Now, the opposite is true for going short as well. Let's see like a really good condition. Let's take this for example here. You can see that we have here a sell candle and we have the overbought condition. You can see that there was a cross before that already, and here definitely. So the red line, the black line crosses the red line from above. You can see that the red volume bar exceeds the average price traded for just a little bit, but still that is valid. And you can see that the second volume candle, even if it's just a little bit, it still exceeds the first candle. and also the average price traded. Okay, and then for the confirmation, you can see that the indicator also creates like a sell and then turns into this red thing here. So again, this trade is valid after the volume bar exceeds the moving average price and is also greater than the first bar. Okay, so basically give it two bars. The first bar is like the setup bar and the second bar is like your entry bar of the volume. Now let's see, these are really great examples of really perfect trade setups. Well, trading is not rocket science, okay? It's not that accurate, which means that sometimes you get like signals or setups that are not looking that great but would have generated you a nice return like this one here. So oftentimes if this setup is a little bit turbulent, it means that there is a bigger move coming. Okay, it's not just cycling anymore, it's breaking out, and therefore it's, you know, messing with the cycle indicators and everything like that. Now this is like a, let's focus on this buy trade here. First of all, the two setups that I showed you are the perfect entries for this strategy. There are not so perfect entries, and I always create like a from 0 to 10, and I weight it if like 10 out of 10 is that the trade entry is perfect. 6 or 7 out of 10 is something that I wouldn't put that much percentages of my equity and account balance into the trade, but I try to still get these as well. Now you can see that the first blue bar does not exceed the volume, average volume traded, and the second bar does not exceed the average volume traded. One thing is clear here, that the second volume bar exceeds the first volume bar, which is actually why I would give it a 7 out of 10. Here the problem is that the cycle indicator is going into the opposite direction. It still tells us that this is actually an overbought condition and it wants to, you know, get lower here. But sometimes the energy of the markets is that great so that the cycle indicator cannot go lower anymore and cross the line below that, which means that this is a sign for a really strong upwards thrust, upwards move. Like the energy of the market is so great and wants to go up that much that the cycle indicator is not able anymore to go all the way down. So you can see that the confirmations here also, there is like the buy and then the green zone here. So you can, after you did practice the perfect setup, you can go ahead and try to actually get more signals here. Now let's go again. This is also not a perfect signal because you can see that the cycle is not above the line here, but you can see as well this exceeds the average price, this doesn't. Maybe you can wait for the next bar, or maybe you can enter, but with not the 100% trade size that you would if it would be a perfect setup. But here definitely this is a really nice entry because it crazily exceeds the average volume traded on this bar, as well as the black line crossed the red line here, and also the sell is also confirmed by the indicator. So you can see that again, this would be a really perfect setup again. It's overbought. Black crosses the red above 90. The volume bar exceeds the average price traded. The second volume bar is not higher than the first one, but it's equal to, I would say. It's not that great of a difference. It exceeds it, and you get also the confirmation from the indicator. So I would give it like a 8.5, 9 out of 10. So this idea between 0 and 10, and then you decide about the quality and the weakness of the entry setup, defines how much of the entire trade volume you want to put into the market is going to be used. If it's like 8 to 9, that means that you're going to use 80 or 90% of your allowed trade size based on the account size and based on the money management rules. A 10 out of 10 would give you the allowance to use like 100% of the allowed trade size. 5 out of 10 would give you 50% of the allowed trade size for the entire setup, okay? So before we go to the money management stuff, I know it's the boring stuff, but it's the most important thing, actually. Let me go ahead and show you exactly what these indicators are and how you can find them, okay? So let's go ahead and let's find the first indicator here in the charts. What you can do is you can click on, you can always click on source code. Let me open that up. So you can see that here you can find the source code. It's in PineScript. This is PineScript. It's actually a really easy language, but you don't need to be a coder in order to get this strategy working. The only thing that I'm interested in is you can see that here is the name. You can see that here is the name of the indicator. And if you click on it, you can copy the name of it. And it also says by whom, you know, like this is like the name by CoinSpore, okay? So you can click on cancel. You can click here on, this is here like on the indicators. So let me check it out, Heiken-Ashi. And then we find it's the CoinSpore one. Now, so this is how you can find all the indicators. So in that case, let's go ahead. You can see I have two indicators here. Let's click on the source code here. This is the better volume indicator and by the Lazy Beer account. So I click on this better volume indicator. I go ahead, click on the indicators, enter better volume, and I can find it. It's the Lazy Beer one, okay? And then the last indicator is the cycle indicator. Let's click the source code. I really love the double stochastics. So this is the double stochastic oscillator by H. Potter. And you find it here. So you just click on them and you can add all of these to the chart. For the Heiken-Ashi smoothed, I used the EMA length of 20. You can play around with the style, but I didn't really change anything here. Let's do the volume the last, because this is the one with the biggest parameters. So the double stochastics indicator has a length K of 6, length D of 3, length slowing of 6, top band 90, low band should be actually 10. Let me just change that here. And then save as default. It doesn't let me change it here, but I can change it here. Okay, so the top band should be 90, which is the red area here, and the red line here, and the low band should be 10, which is the green line there. But it doesn't let me do it. That's maybe a little error in the code. So the style, you can, again, K is the black line, D is the red line, the overbought level is red because we're going to sell, and the oversold level is green because we're going to buy if the cycle indicator is in this area. Now let's go ahead and check out the better volume by Lazy Bear. We're going to use a look back period of 9. We are not enabling the bar color. We are using use 2 bars. We are using low volume. We are using climax up, climax down. We are not using churn and climax churn. You can click on Save as Default. You can click on OK. And you can see the style here. So the color 0 is like the blue line, the blue bar, which is the up thrust, the power, the energy of the buyers. Color 1 is the red one, it's the energy of the sellers. And then the plot is the moving average line. Okay, so this one here, it's the black line here, okay, highlighted, okay. So I'm just, okay, and then I'm going to use the step line because I use step lines because they are usually very precise, and they just, if they change just a little bit or something, it makes a big difference. So that's why I like to use the step line here. And then this plot is columns. It's not histogram, it's actually the columns, but I call it bars since it's trading and we are also used to talk about the bars. So basically, this is the setup of the parameters and everything. Now, let's go ahead and let's talk about the money management at the end. Let's talk first about where you would put your stop loss, okay? You can, let's take this one here, for example. You can see that the buy move before created the highest candle of the buy move, which is this one here. This would be the candle, okay? And for us to place the stop at the precise point, what I do, for example, I go ahead and locate the highest candle of this cycle, of this wave, and I measure the difference between the high and the low of this candle. And then I divide it by 2.5 times, which means 2.5 times the size of the high and the low of this candle. So I just, as a rule of thumb, go ahead. You can see that this is like the size. And then I place it at the high of the candle. So I add it, like this is the candle, this is the needle, and I place this here and then go 2.5 times above it. So this would be around 1 time, this would be around 2 times, and this would be around 2.5 times. So in our case, I would place the stop somewhere around here in this area. And so the difference between your entry and the stop is the one that you need to calculate for the perfect trade size of your position. So the difference between those two is what you are willing to lose, and this is dynamic, this changes all the time, which means that you should also learn how you could calculate that you're going to only use a maximum of 2% of your entire equity at any given time. but you don't need to use 2% for only one trade. You can scale into the position as you go along, but the entire positions of your short trade in this case should not exceed 2%. So these 2% are calculated from the difference of your entry, which would be whenever the red bar exceeds the average volume traded. So would be somewhere around here. So all the way up to here, this is like the span that you're willing to, give the market the breath to move. And the difference between those should not exceed 2%. So you need to calculate the pip value of the US dollar, Canadian dollar, and then from the pip value, you know that how much a pip is worth, and then you know how big your trade size should be. You can also protect this trade by adding the complete trade size of your initial sell trade and add it above the stop loss line. And then if you go like, let's say you go down with like one lot, you have a protection that is also one lot and is exactly at your stop price. And then the stop loss of this counter trade would also be at 2% of your trading account size. I know it's a little bit too complicated. It's not necessary to do that at the beginning, but this is how I usually protect all of my trades. Now, how would you go about the management of the open position? You are going to manage your open position in the way that I would like to do it. So there's many ways, but I show you the one that I prefer, which means that once I exceed, once I'm in the profits for X pips, you can define that. You're going to close like 50% of your trade. Okay? And then you can put your stop loss from the 2.5 times of this candle. Let me draw it out a little bit. This gets a little bit too confusing. So your stop would be like 1, 2 here. And then let's copy this one. Or clone it, I think that's the right way to do it. Is it? Yeah. Change the color because this would be your entry. So we said it's 2.5 times of the candle, so 1, 2.5 times. This is your initial stop loss, okay? And then at this point, to protect it, I would set like a buy order with the same size of the sell trade here and put the stop loss also where the 2% should be, okay? This is like a cash stop loss. Now, since this is like actually a sell, we're going to also create a red line here. And as soon as it exceeds it, you're going to enter. And the difference between those two things create like the trade size. Maybe we can use the ruler function. And let's see. Maybe like you can see this is 44 points. I think it's 4 pips, 4.4 pips. I never used this ruler before, but you can figure out how to calculate this using TradingView or some other calculator. Now, the open trade management was what I wanted to show you. So you're going to enter here, okay? And as soon as the market goes in the favor of your direction, let's say it's over here, you can close 50% of your initial trade size, and you can move your stop all the way down to the high of the candle, and then a little bit above this would be your stop, which means that the 50% of your trade size is already profit taking, and you reduce the loss of this trade already. And usually what I like to do is I calculate the difference between how far should my trade be in the profits, so that even if it cracks up to the stop loss and hits the stop loss, I still made a profit. Sometimes I close more than 50%, sometimes I close less than 50%. It's all dynamic and it's no precise rocket science. But this would exceed the training video here to give you all the details about how to calculate this stuff. You don't need to calculate it, you can do it as you go, but you will learn this and you will get better at this. So the concept here is that you should close as much of your trade size so that if the market moves against you, even if you get stopped out here, you're zero or you're making profits already, okay? That's the concept, to get out of the risk of this trade as soon as possible. Now you're not losing 2% of your account anymore. You're either losing a little bit, you're breaking even, or in the best scenario, you are going to make a profit anyways. And this is the great stuff now, because you don't emotionally are attached anymore to this trade, because you are having the feeling already, okay, cool, well, nothing can happen anymore. You feel more relaxed and you can let it run in your favor more. The problem of the beginning traders, as I was a beginning trader also, I did get out of the profitable trades way too early, because I was always emotionally attached to my trade, because I did not know how to actually manage your open position in a way that it doesn't really matter if it hits your stop loss anymore. And this is how you can do it, okay? So now how do you exit this trade? Well, you can go ahead and you can use the stop, and you can go ahead and trail for every second candle. So if it turns 1-2 candles, you can go ahead and put it to the third candle, then again 1-2 candles, you can go ahead, put it to the third candle, and then again. So you get the concept. This is how I trail basically. Or you can wait until the cycle indicator here goes to the oversold direction, okay? So this is clearly something where I would take a look at. It's not necessarily said that the market move is going to stop just because the cycle indicator is here at the bottom, but this just tells you that you should be taking a better look at your position, and maybe you can put your stop somewhere around here, and then you know that sometimes the market can turn again. But here is actually no real, you can see that this is not buy volume, this is not big fat blue lines here. So I would wait until like you get maybe the first blue line, or you can see that even if the cycle wants to go up here, it's still a big sell volume. And usually this is like the institutional professional traders messing with the stops of the beginner traders, because everybody gets here the double stochastics. They think, okay, let's buy here, and then you're going to be screwed with your stop losses. This is like the stop hunting that takes place to even increase the profits of your short trade. I know it's pretty nasty stuff, but okay, man, that's trading. So your gain is somebody else's loss, all right? And okay, so this is actually how you would manage the open position. Actually, I talked about the money management, so don't use more than 2% of your entire account, and you need to dynamically calculate it at any given time. Okay, I definitely know that this is really not so easy stuff. Feel free to, rewind, pause this video. And also, if you have some questions, or if something was unclear in this video, I'm just a human, right? I make mistakes and I don't think sometimes about very important stuff while I record the sessions. Feel free to comment. Also, if you want, you can join the Facebook group. Definitely sign up to the YouTube channel, because I'm going to create more tutorials like this. And just get in touch, get in contact. The Facebook group is there to, share ideas, worries, strategies with the group, with the community, like we are market rock stars, right? And so this is the basic idea behind the Facebook group. I also have like a Facebook page, and everything you can find in the description of the video. Now, I have to say thank you very much for watching. I hope it wasn't that difficult for you to understand and also boring. And yeah, let's check out your efforts with this. Let me know how it went with the paper trading, right? You can go ahead. You can, if you click here, for example. So I did set up the paper trading account already. You can see here, this is paper trading. Then this window would open up. The cool part here, you can already use percent sign of the account position. Okay, so you can say, okay, let's use 2%. Take profit or must below the entry price. Okay, whatever. Here you can use 2%. This is the one that I wanted to show you. So if you use 2% of your risk, it's already calculated. This is the units that you can sell or buy. You can also create like a limit order or a stop buy and sell stop and buy stop order. I'm not going into the details of this. What I want to show you here basically is just to get started. You don't even have to set up the paper trading. It's enough if you use like the lines and then trail and do the things first and draw it out first. Then you can mess around with the paper trading function of TradingView, and then you can practice like crazy, okay? So thanks again for watching this. I hope you liked it. And yeah, just comment, feel free to connect. All the best and take care.